Hello and welcome to my InvestEngine Stocks and Shares ISA portfolio update for May 2024. As always, I'll start off by having a quick look at how the markets have been doing, and then after that I'll go through my main InvestEngine DIY ETF portfolio and show you how the different factors have been performing, before quickly going over the InvestEngine managed portfolio as well. To finish the video, I'll calculate my total portfolio balance and share my thoughts on the portfolio going forward. Remember, these videos are not financial advice or a recommendation of what to invest in. When investing, your capital is at risk and you may get back less than what you put in. So, looking at the markets, I'll put up the charts of all the major indexes on screen now, and we can see that apart from the topics, which is slightly down by 0.12%, they're all up. The S&P 500 is up by 4.59%, FTSE 100 up by 0.33%, and the Euro Stoxx 50 up by 0.68%. However, we can see that over the past week or so, there has been a slight dip. So it will be interesting to see if that continues, or if it's just a brief pause before a further rally. It's also worth mentioning that although the S&P 500 is up by 4.59%, UK investors buying ETFs that trade in GBP have not seen the full benefit of this. And that is because the pound has strengthened by 1.7% against the dollar over the past month. When stocks priced in dollars are converted back into pounds, you get less pounds for each dollar. So when you're buying an S&P 500 ETF that trades in GBP, you need to remember that all of the underlying securities within the ETF are priced in USD. Therefore, the exchange rate from GBP to USD does matter and will impact your returns. This chart visualizes this. You can see how the Vanguard S&P 500 ETF, VUSA, that trades in GBP and UK investors buy, is only up by 1.89%, whereas VOO, which is the one that American investors buy, is up by 4.82%. I just thought I'd briefly mention that again, as I haven't in a while, and it's good to know why the performance of your ETF may differ to the performance of an index. In terms of general news, I won't go into too much detail about what has been impacting the markets this month, but a clear highlight over in the US is that Nvidia just continues to post ridiculous results and continues to soar, up a further 32.9% over the past month alone. I remember back when Nvidia was around $400 and people were thinking it was overpriced then. It really does go to show it is impossible to predict what will happen in the stock market. Over in the UK, the big news obviously this month is that Rishi Sunak has surprisingly called a general election that will take place on the 4th of July. It'll be interesting to see how the result of this impacts the market, but given that it is an almost certain victory for Labour, you would expect the result to already be priced in. It seems unlikely there'll be any surprises, but I could well be wrong. And very quickly, it's also worth mentioning that UK CPI came in at 2.3% for the 12 months to April. This is very close to the Bank of England's target, but the markets were expecting 2.1%. So although it does sound like a good result, it did not have any impact on UK stocks because it was below what economists forecast. What do you think about this month's news? Will Nvidia continue to soar, or are we finally at the peak? I definitely wouldn't want to bet against it, but I'm also scared about investing in it because I just know as soon as I go in, it'll drop. And in regards to the general election, how do you think it will impact the UK markets? Anyway, that is the roundup, and now to start the portfolio update, I'll look at my main InvestEngine DIY portfolio, and that now stands at a balance of £20,432.55. And that is up from £19,681.28 at the end of March. With this increase partly due to a further contribution, but also some decent returns from the market as well. Jumping into the portfolio page on InvestEngine, we can see on the maximum performance chart, my investment return figure now stands at plus £2,770.49 or 20.42%. That is great to see, and a couple of weeks ago it was even higher at plus 3,000, so I was hoping to share that small milestone in this update, but the markets have gone down a bit since then, and I'll have to wait a bit longer. To see how my portfolio has done over the past month, switching to the 1 month chart shows a return of plus £404.97 or 1.66%, and as I said, you can see it is characterised by strong performance in the first half of May, followed by a very small downturn in the second half. In terms of new contributions this month, it was the usual £500, which has actually gone off the page here, but I'll quickly switch to the 6 month chart and you can see that black dot on the 29th of April with my contribution. For some reason, InvestEngine keeps on leaving a little bit of spare change, so even though I instructed it to invest the full 500, it did leave 58p. Definitely not the end of the world, but I do wonder why that is. Moving back to the 1 month chart and scrolling down to see how the ETFs have performed, it is green across the board, but with some significant variations. Before going through these, to quickly recap how my ETF portfolio is constructed, it's a variant of a core and satellite portfolio. I have quality ETFs at the core of my portfolio at a 60% weighting across GGRG, XDEQ, and UC99. I'm fully aware that these ETFs overlap slightly, but as I always say, overlap is not a problem as long as you understand it is there, and as you'll see in this update, they do perform differently. And then for satellite positions, I have other factors such as momentum, value, and small caps, as well as a small allocation to emerging markets. Returning to InvestEngine, we can see that my first and largest holding, the Wisdom Tree Global Quality Dividend Growth ETF, is up by 0.86%. But this is significantly less than the Xtrackers MSCI World Quality ETF, and that is up by 2.93%. I will be sending out an email giving another overview of GGRG to explain in detail why this performance differs, but it can be summarised in one word: Nvidia. As GGRG is dividend weighted, it has a tiny allocation to Nvidia, whereas XDEQ has Nvidia as its largest holding. So given the performance of Nvidia in May, it's unsurprising that these quality ETFs have delivered such different results. Next up, the Xtrackers Momentum ETF, and that is up by 4.47%. As it is a factor that quite literally benefits from winners that keep on winning, it is unsurprising this has done so well. Nvidia has over a 7% weighting in this ETF. Then I have the iShares S&P Small Cap 600 up by £7, or slightly down on a time-weighted rate of return basis. So it is performing worse than the broader market. But this does not faze me, as my main reason for investing in the S&P 600 is that I'm banking on small caps seeing some great performance if or when the US interest rates are cut. It may take longer than expected for that to happen, but I'll put the positive spin on that it allows me to build up my position in the meantime. It's a risky strategy, and small caps may go on to underperform, but I'm willing to take that risk with a small part of the portfolio. Up next is the USA Quality Factor ETF, UC99. We can see it is up by 4.23%, which is again mainly due to Nvidia having a large weighting in this ETF. Finally, I have the Value Factor ETF and Emerging Markets ETF. Value is up by £4, and as I've been saying in most of these updates, value really is out of favour at the moment, and it is questionable if the factor premium will ever return, especially for large caps. So that is why I only have an 8% weighting to it. Of all factors, it is the one I have the least conviction with. Lastly, Emerging Markets is actually in the green by 0.53%. This is a long-term hold for me, and I'm hoping that these emerging economies such as China and India give some great returns at some point in the future. So that's the 1 month performance of all my ETFs, and now I'll switch to the maximum view and scroll through them all. Remember to take into account when these ETFs were added to the portfolio. I switched to all these ETFs in November last year, with the exception of UC99, which was a few months ago. The rest of my returns in the total return figure are from the previous ETFs I held, dividends received, and the realised gains. The beauty of a multi-factor investing portfolio like mine is that you can see at a glance which areas of the market have been doing well. So it is clear that momentum continues to be the big winner, whereas small caps, value, and unfortunately quality dividend payers have lagged behind somewhat. So that was the main portfolio, but let's now have a quick look at the InvestEngine managed portfolio. This portfolio was created purely to showcase how an IE managed portfolio performs. We can see it is up by 16.98% since the 1st of November, and in May it is up by 1.81%. So slightly better than my DIY portfolio actually this month. Scrolling down to the holdings, I won't read them all out, but unsurprisingly the S&P 500 and Momentum Factor ETFs are the standout performers here. Feel free to pause to have a further look, but this part really is just a quick showcase, as I know a number of my viewers are interested in how this portfolio performs. Unlike a lot of other managed services, it is reasonably priced at only 0.25% per year, and as a factor investor myself, I do like the ETF selection, and there isn't much to criticise here. I guess the one thing you could say is that maybe 10 ETFs is a bit too many for some people, but I do have 7 myself, so it doesn't really bother me. That is it for this update. Both the DIY and managed portfolios are continuing to do well and more than recovered from that dip we saw last month. To get my total combined portfolio balance, I just need to add the DIY and managed portfolio numbers together, and that gives me the figure of £20,549.47. I'm quite happy with this small downturn that we've had at the end of the month, as it makes that next contribution go that little bit further, and I do always find it nice to top up at such a time. That being said, it could always dip a lot further, we never know. As a long-term investor, I'll just be continuing my regular contributions each month and hopefully building tax-free wealth over the long term. Regarding the breakdown of the portfolio, I'm still happy with all the ETFs selected. Some are clearly doing better than others, but that is the whole point of a multi-ETF portfolio. If they all went up and down by the same amount, then there would be no point having more than one ETF. I did briefly mention in the video why GGRG has underperformed recently, but I will be sending out an email shortly to my newsletter subscribers giving a further run through of that. So be sure to sign up if that is something you'd be interested in. I believe that over the long term, a factor investing portfolio like mine has a chance of slightly beating the market. I'm not aiming for crazy outperformance, but if the investing factors do persist, I should be able to obtain a slight premium. Of course, past performance is no indicator of future results, and I'm fully aware that there are no guarantees. A simple market cap weighted global ETF may well be the better choice for most people. That is it for this one. Let me know how your portfolios have been doing in the comments below, and as always, thank you for watching. I really do appreciate it.